Last week, I pointed out that the data suggested potential home sellers are growing more cautious. This week in the data is a continuation of that trend, with the weekly new listings level dropping for the fourth week in a row. As the market rolls over into the late summer, it's not uncommon to see fewer sellers. Earlier this year, though, we consistently measured more sellers than in 2024. Now there are fewer. So even accounting for a seasonality, it seems that sellers are deciding to hold back until conditions are more favorable. That means fewer new listings, and it also suggests fewer completed sales. So I've been reporting the data that has shown slight sales volume growth over 2024, but this latest trend with fewer sellers definitely clouds the outlook on transaction volume. And sure enough, there were fewer home sales this week started than in the same week a year ago. In another surprise, overall inventory declined this week. One reason for the dip is that many sellers who don't see the offer they want are choosing to withdraw their listings and wait for more favorable conditions. It's not just the new listings rate. I'll share some new data today that shows the withdrawals rate is up too. A question is, how big is this shift? If potential home sellers aren't happy with the market and many are just choosing to hunker down, that could be a shift in all the assumptions about what happens in the real estate market for the rest of 2025. The whole narrative is about how inventory has been growing. But what if that is suddenly no longer true? So I'm Mike Simonsen. I'm the Chief Economist for Compass. In these videos, I look at the U.S. housing market every week. Our goal is to help everyone understand what's actually happening in the market right now so they can make the best decisions when buying or selling a home. In these videos, I use data from Altos Research, as well as insights from what we see at Compass, the largest real estate brokerage in the country by sales volume. So let's dive into the data here as of August 11, 2025. So let's start with the new listings data today and track this latest trend. So are sellers backing off? This week, there were 66,000 newly listed single-family homes. That's down 5% for the week and 11% fewer home sellers than the same week a year ago. Condo sellers are slowing even more abruptly. There were 14% fewer condo sellers listing this week than the same week in 2024. The normal range for new listings in early August would be 75 to 80,000 single-family home sellers in a given week. So, there are probably 15 to 20% fewer home sellers right now than what you'd see in the pre-pandemic era. You can see it in this chart. The gray lines here are all those old years. The blue line is 2025. It shows the new listings level dropping for 4 weeks in a row. And this data bounces around a little bit. And it can be influenced by any number of factors like weather. We had a lot of flooding and extreme weather across the country recently, so I wouldn't be surprised if we see a bump in this data next week. Maybe there's like one last gasp in the market before the Labor Day holiday at the end of the month. But the trend, as of now, seems to be taking shape. Home sellers seem to be waiting for market conditions to improve. This has two big implications. One, inventory stays limited. Supply can't grow too big if there aren't sellers who need to sell. And two, it puts at risk this very nascent trend we've been watching where home sales were coming in above 2024 finally. So if there are fewer sellers each week, there will be fewer sales. The new listings trend is an important shift to keep our eyes on. In addition to the new listings levels, I've also been hearing lots of anecdotes from the field about withdrawals. Sellers who didn't get their offer and they want and therefore are letting the listing expire or canceling the listing with no sale. A homeowner who doesn't feel the urgency to sell, they can choose to wait for better conditions. And we can measure that too. And so it turns out that many are choosing to do just that. So what's a good way to illustrate withdrawals? What we've done here is take the total count of withdrawn listings divided by the count of new listings in the same period. It's sort of a measurement of frustration. how many new listings are ultimately walking away with no deal. So we call this the withdrawal ratio. Withdrawals as a percentage of new listings. If you follow me on Twitter or LinkedIn, I shared this data last week and we had a great discussion there about the implications of the data. Notably, on this withdrawal ratio, the 2025 line is at nearly 40% nationally. And we ran this data at the state level too. Florida, not surprisingly, has the highest withdrawal ratio at around 60%. Notice in this chart that the rate is accelerating now. You can see a normal seasonal shape here. In this chart, each line is a year from January through December, and you're much more likely to withdraw over the holidays at the end of the year and then try again in the spring. So you see a normal U-shaped curve here. The data now, though, sure seems to indicate that this rate is accelerating more steeply here in August. This tells us that the market has not just fewer sellers, but that those that were on the market are walking away too. As a result of all this, the active inventory of unsold homes on the market has plateaued for now. In fact, there are fewer homes on the market for sale now than just last week. So the unsold inventory of single-family homes on the market ticked lower this week to 859,000. That's 0.75% fewer sellers than a week ago. Last year at this time, inventory was growing at 1.5% per week. In the years before the pandemic, it would be actually pretty normal for inventory to peak in July and then begin the seasonal decline in August through the end of the year. But since the pandemic, seasonality has shifted much later in the year, as late as November to peak inventory before retracting over the holidays. So in 22, 23, and 24, we had rising interest rates late in the year, and with rising interest rates comes rising inventory. So inventory peaked late in the year. In the inventory chart here, I focused just on 3 years, comparing 2025 data to last year, 24, and then 2019, which is the last sort of normal year before the pandemic. Peak inventory back in 2019 was, in fact, July 30th. Peak inventory last year, 2024, wasn't until October 30th. So in this view, the blue line is 25, and you can see that inventory ticked down for the week. The spread over last year is now just 24%. Just a few weeks ago, there were 30% more homes unsold on the market, so there's a real compression happening. Now, this mid-August inventory decline might be a short blip. I suspect maybe that next week we could see inventory climb again. We know that there hasn't been a change in buyer sentiment in recent weeks, so this is not buyer demand picking up. So if tightening inventory becomes a persistent pattern, then this is how we document a shift in seller sentiment. A shift where sellers are walking away would be significant. It would mean that fewer transactions are likely. We could lose the little momentum we had in sales growth, but it also suggests that tighter supply means renewed price pressures, and we could see a reversal in that slowly easing price trend that we've been documenting for the whole year. So this inventory trend is frankly surprising to me. I expected inventory to keep climbing through the quarter. Like I said, next week inventory and new listings could pop back up again. Maybe it's weather related with floods and rains in a lot of the country. But this is worth keeping an eye on, because if inventory has peaked for the year and we really are watching sellers retreat, that's an important shift. Buyers, potential buyers and sellers are not tuned into this new reality yet. Now we can measure the market contraction in pending sales numbers too. So this week we saw 66,000 newly pending single-family home sales. That's down 6% for the week. Condo sales held up a little better with 13,000 newly pending condo sales. In this chart, you can see that the 2025 line dipped below 2024 for the first time in many weeks. Pending home sales have ticked lower for 2 weeks in a row. Like I said, this could be a little blip in the data. 1 week isn't a trend, but it is notable that the blip didn't blip the other direction. Fewer contracts started this week. So is there any potential good news in the mortgage rate data, for example? In the last 10 days or so, we've seen a slight improvement in mortgage rates. The 30-year fixed rate eased maybe 20 basis points from 6.8% to 6.6% as a result of the soft employment numbers. So if you're hoping that a little improvement in mortgage rates will help home sales, I'm afraid this move isn't enough yet. Rates will have to be closer to 6% before we see a meaningful increase in home buyer demand. We saw that opportunity last nearly a year ago in September 24, and it caused a bump in transactions and in prices into the fourth quarter. We don't, like with mortgage rates still at 6.6%, we don't yet have that help this summer. So let's finish today with home prices. Since there have not been any conditions to help home buyers, demand stays muted. The little drop in mortgage rates is nice, but it's not really enough to move the needle. So even if supply of homes for sale starts this contraction persistently, it's hard to imagine home prices climbing notably unless home buyer demand picks up too. The median price of single-family homes right now in the U.S. is $399,000. That's unchanged from last week and is just 2% above last year at this time. In this chart, I'm showing 4 years of home prices. The yellow line for 2022 has a couple of points to pay attention to. It has 2 big drops in June and September. The market was shocked at those moments by rapidly rising rates, and you could instantly measure that shock in price drops. We have not had this shock this year. The blue line for 2025 is hovering just under $400,000. If we get unlucky, for example, the inflation numbers surge, that could drive mortgage rates higher from here. If we see a jump in mortgage rates, this market is very sensitive, and I expect we'd see an immediate price correction like we saw at those 2 points in 2022. On the other hand, the last year's purple line showed surprising strength late in the year, and that was from that demand boost in September when mortgage rates dipped close to 6. So it's now been basically 3 full years with mortgage rates over 6 and most of that time close to 7. 6.5 has not proven to be low enough to move the needle on buyer demand. But if we get lucky and rates continue to ease, 6% for the 30-year fixed rate mortgage is the threshold that I'm looking for to create a shift on the demand side, which we'd see in elevated pricing and we'd see in transaction volume lift as well. That's all the data we have time for today. Let's keep an eye on this shift in home seller sentiment. If it persists, the big narrative you hear in the media will have to change. Buyers and sellers will not expect what's coming. So let's stay on top of the data. Thank you. More next week.